Welcome everyone. I, on behalf of Institute of Chartered Accountant of India, welcome you all for the webinar on understanding recent judicial procurements under GST. I request we have with us Central Council member, Chairman of Direct GST and Indirect Tax Committee, CA Umesh Sharma sir. I request him to give opening and welcome address to the audience.
Thank you, Jayesh, and welcome you all for this most important webinar on the judicial pronouncement and understanding its impact on our practice as well as on our clients. Friend, GST is a very evolving subject, and day to day there are new things and new case laws are coming up. And today we have a very eminent faculty, Advocate Dr. C.A. Avinash Poddar, who is a very God-loving person. He is he and myself both are Bhakt of Hanumanji, and today is a Shanivar. So you all people will be having a very good time under his guidance on this subject. Friends, as a chairman of GST and IDT committee, we are very much thankful to our vice chairman, who is also a passionate chairman of the GST and IDT committee, Rajendra Kumar sir. Due to some another meeting, he is not able to join, but under his guidance and under his support and motivation, we are working hand to hand, both together to give the latest knowledge, give some insights of GST to all our members across India. In the last week, we have met to CBIC officials Sanjay Mangal sir, Anshita Agarwal, and Garg sir. Further, we also met GST and CFO Manish ji, and we have discussed lot of new initiatives for our members. We will having our GST symposium. Further, we are in connect with the GSTAT President Mishra ji. We will have a outreach program across the branches wherever tribunal benches are there, and we are also having an outreach program with the CBIC and department which are planned across India. Further, our newsletters are there. Our WhatsApp channel is been brought out. I will request you all to join this WhatsApp channel, which is there QR coded in your JPG of this today's webinar message. So I will request you join in maximum number so you can get the latest information of GST about our institute initiatives. Friends, I am very much thankful to all the participants who are joining regularly to this webinar and our tech team. So I will request our moderator, Jayesh Lalwani, who is from Jalgaon. He is a past chairman there and a very active member in this GST subject. So I hand over to the moderator, Jayesh, for the further proceeding. Over to you, Jayesh.
Thank you so much, sir. Now, I take privilege to introduce our today's faculty, Dr. Avinash Poddar sir. He is a founder and managing partner of Ashwa Legal Advisors LLP. Dr. Poddar sir brings with him over 25 years of rich professional experience. He began his career as a chartered accountant and has been practicing as an advocate since 2017. He have been qualified through various degrees such as PhD in GST, Masters of Law, then he have completed his DISA, then he have also completed post-graduation certificate in cybercrime, IP examination, and he is a Microsoft certified professional as well. He has a regular appearance before Honorable Supreme Court and various high courts and key tribunals, having argued more than 2000 plus matters. He has authored over 20 books on taxation and continues to contribute insightful articles to reputed journals and platforms. An accomplished speaker, he has delivered over 1,500 plus sessions across national and international forums, including various prestigious and leading committees. His work has earned him numerous awards, such as Times of India Limited Gold Award, Best Vocational Award, and many more. Beyond his professional achievement, he is also a music enthusiast and former cricket player, reflecting his well-rounded personality. With with such an impressive journey and depth of knowledge, we are truly fortunate to have him today. Please join warmly to welcome Dr. Avinash Poddar sir. I request Avinash Poddar sir to please take a charge and guide us on our today's topic, that is recent GST pronouncements.
Thank you so much. I hope I'm audible, Jayesh
Yes,
bhai.
sir. Yes, sir.
At the outset, let me thank the Chairman IDT Committee, Umesh ji, Rajendra ji in absentia, and the entire IDT Committee team for organizing this webinar and giving me this opportunity. And I cannot fail in my duty by not thanking Jayesh bhai for the wonderful introduction given. Now, the topic which is given to me is the recent judgments and the impact thereupon on the professionals or maybe on the taxpayers. So what I intend to do is there are many orders, I'll say orders, not judgments. There are many orders which are impacting the taxpayer who has approached the writ court. So first and foremost is very important to understand the difference between the writ court and the appellate forum. The orders which we are going to read or the judgments that we are going to refer today are basically emerging out of the writ forum, that is in Article 226 of the Constitution of India by the various high courts. And couple of them have traveled to Supreme Court, and then the Supreme Court has given a green signal, or maybe they have dismissed it or rejected the judgments of the High Court. That is what we are going to discuss. The first aspect that comes to my mind is one of the recent judgment of Supreme Court, which is Armor Securities. Now, Armor Security India Limited deals with a very important aspect. Friends, we all are aware that under GST there is a simultaneous levy, a parallel levy, both by central as well as state. So if it is a intra-state transaction, then center as well as state both are levying tax. So at times it happens that your administrative control may be with the central authority, but state authority comes forward and conducts an investigation or maybe a search against the person who is falling within the administrative jurisdiction of central authority. So there is one provision in law, which is section 6, subsection 2, clause B. We have discussed this section again and again. There are a lot of high court pronouncements on this particular section. And the thumb rule is like this. The bottom law which has been let down by various high courts when it comes to section 6(2)(b) is this. The court says that cross jurisdiction has no restriction. And that is what section 6(2)(b) is all about. If we read CGST Act, it empowers the state authorities to carry on an investigation or to initiate and conduct an investigation and then conclude it. But what they say is that the person who will initiate the investigation must complete it. Meaning thereby, if central authority is initiating the investigation, and then this state authority is also coming for the same kind of investigation, then the state authority should hand over their intelligence or their evidences to the central authority who has initiated the action first. And then the central authority shall conclude the entire investigation, issue a show cause notice, and adjudicate. So there are two underlying questions or two important principles which are emerging. One, or I'll say questions which are emerging. One, whether a person who is within the administrative jurisdiction of a central authority, can the state authority initiate action against the same officer? That is the first question which arises out of this? And the answer is yes. See, if I develop a intelligence, I collate the evidences. I cannot be expected that my intelligence or my research or my hard work I'll recommend to the central authority only because the central authority has the jurisdiction on me, jurisdiction on the taxpayer against whom the action is to be initiated. That becomes illogical and that becomes impractical also. So, therefore, the provision of the law says that if I am falling within the administrative jurisdiction of central and the state has developed an intelligence against me, so they can certainly get the investigation done against me. They can initiate search, they can do inspection, or they can invoke the other provisions which are not the administrative provisions but which are the investigative provisions. So therefore, a lot of cases were happening across the country. Multiple cases were happening wherein first the center will come, after couple of days, after some time, the state will also come. So everybody was going to the court saying that now the state is coming at the second time, or maybe the center is coming at the second stage, which is impermissible because there is a violation of 6(2)(b), and therefore the court should quash the second proceedings. Now, please try to understand. One, the answer is yes, that if I am falling within the administrative jurisdiction of center, the state can certainly take action against me. They can initiate the investigation. I've already answered this. The answer is yes. But we also need to remember that cross empowerment is allowed. I'm repeating, cross empowerment is allowed in investigative actions, not in administrative actions. So I personally believe that if it is an administrative action, for example, the notice of scrutiny under section 61 or the audit notice under section 65, that is not impermissible. Cross empowerment is not there. So if I am having the jurisdiction, administrative jurisdiction of center, only the center can initiate the scrutiny and the audit or any other administrative actions, but not the state. So cross empowerment is only for investigative function. This ends here. Now comes the second question. If center starts the action, can state also start the action? The answer I've given yes. But when it is not permissible, that is we need to understand, and that is what Armor Securities lays down as a principle. But before going to that principle, which is laid down by the Supreme Court, we also need to understand what is the logic and what is the basis on which that particular principle has been developed and adjudicated by the Honorable Apex Court. Time and again, various high courts have said that we need to emphasize not on the action which is taken by the center authority or the state authority. We have to focus and emphasize on the cause of action because of which that initiation of investigation has been there or the action has been initiated. Meaning thereby, if the cause of action is same, I'm repeating, this is what is the distinguishing factor, and this is what is the thumb rule. If the cause of action is same, then friends, two authorities cannot investigate simultaneously, meaning thereby cross empowerment is not permissible. But if the cause of action is different, then parallel investigation can be initiated. So I'll now give another example to explain. If there is a purchase from Mr. A, which is alleged, and center has started an action against me, alleging the purchases from Mr. A, that it is a bogus purchase or whatsoever allegations are there, the state at a later point in time cannot start the investigation against me for the same cause of action, that is purchase from Mr. A. But if there are another purchases, let's say from Mr. B or Mr. C, then certainly the state can also initiate the action. Reason being, the cause of action is different. So therefore, we all need to appreciate. See, what happens is we read the law or we read the judgment in the way in which we want to read it. We have a understanding at the back of our mind We apply that, and from that spectacle, we try to read that particular judgment, which is not correct as per me. We have to read it as it is written in plain words, and then try to implement that particular judgment on the facts of a particular case. So therefore, the answer is, if the cause of action is same, I'm repeating, if the cause of action is same, then two authorities cannot initiate investigation parallelly. The second agency who is initiating subsequently will have to hand over it, their investigation, their intelligence, or whatsoever it is, to the agency who has initiated first. But if the cause of action is different, then parallelly both can initiate the action. This is the rule, or this is the understanding of the law. Now, what Supreme Court has said? Supreme Court has first defined what does it mean with the term initiation of proceedings. Please try to understand, please be with me and try to understand this. Supreme Court has beautifully answered to this query, that when it can be said that a proceeding has been initiated. Court says mere issuance of summon does not mean that the proceedings has been initiated. Proceeding has been initiated is not to be decided from the issuance of summon stage. It cannot be decided from any stage which is a stage prior to the issuance of show cause notice. Meaning thereby, in Armor Securities, the Honorable Supreme Court has clarified these doubts. Because what was happening? Center has initiated action. Now state has issued a summon. Will directly approach to the court saying that, sir, center has already taken the purchases of Mr. A or from Mr. A, and they've initiated the action against me. Now, how the state can initiate the action on the same cause of action? So, sir, it is not permissible. Both have initiated the investigation. Only they have initiated the inquiry. Investigation will get concluded and the proceedings will get initiated when one of them will issue a show cause notice. Either that can be center or it can be state. So the point to be remembered here is, when two persons, when two agencies, state and center, let's say both, initiate an action against you or issue a summon against you for a particular cause of action, purchases from Mr. A only, you are obliged to honor the summons issued by both the agencies. It's only when one of these agencies, either center or the state, issues a show cause notice to you, qua the purchases from Mr. A, that you can say that now 62B is going to be hit, and therefore the another another agency which has not issued the show cause notice till date cannot proceed with the matter. This is what is the I'll say observation of the Honorable Apex Court when it relates to 62B. So I'll try to summarize this. One, the cause of action has to be different, then parallel proceedings are permissible. When cause of action is same, then parallel proceedings are permitted till the stage of show cause notice. Once the show cause notice is issued by any of the agencies, may it be DGGI, may it be CGST, may it be SGST. If one of these, any of these authorities issues a show cause notice for a particular cause, then Armor Security will come to your rescue. Please refer para 97 of Armor Security, Honorable Apex Court. Para 97 defines the guidelines which has been laid down by the Apex Court, saying that the moment you receive a show cause notice, in my example, from your purchases from Mr. A, you inform the other authority that, look, sir, the allegation of purchases from Mr. A, the show cause notice has already been issued by one authority, let's say central authority. So therefore, you'll have to write to the state authority, sir, please do not issue or please do not proceed further, because the show cause notice qua the purchase of Mr. A, purchases from Mr. A, has already been issued. That is what the Supreme Court says. Now let's say, even after you send the intimation that this issue has been covered, a show cause notice has already been issued by so and so agency. Even then, if the other authority proceeds with the matter and they intend to issue a show cause notice and adjudicate it, then the course of action can be, you can proceed to the writ forum. You can go to the writ court and say, and then it will be maintainable. The writ will be maintainable under Article 226 of the Constitution of India. So let us conclude this because we have limited time and there are a lot of judgments which I would wish to cover. The conclusion is, same cause of action, two parallel proceedings are impermissible. But when it is impermissible when the proceedings initiate, and proceedings are initiated when the show cause notice is issued. So if it is a stage of summons, if it is at the stage of inquiry, then parallel proceedings even on the same cause of action is permissible. That is the law which is laid down by the apex court. So purchases from Mr. A, both center and state can simultaneously proceed, but the agency which will issue the show cause notice first, that will settle the issue, and the other agency will not be permissible or will not be permitted by virtue of 6(2)(b, read with armored securities, to proceed further. And they will have to drop the proceedings, or they will have to hand over the proceedings to the agency who has already issued a show cause notice, or whatsoever the situation is. And even if we inform them and then also they issue show cause notice or they proceed further, then you can very well approach to the writ court, which is permissible in clause H of para 97 by the apex court. You can approach the Honorable Jurisdictional High Court under Article 226 of the Constitution of India and get a relief for you, because they will have to follow, or the High Court will follow in all probabilities. If the identical issue is there, the Honorable Apex Court judgment, and that will be the relief which can be given to you. So this was the first case which I wanted to cover, Armored Securities. This is a judgment which is a very recent judgment by the Honorable Apex Court. And I'll say it lays down a very important principle, which unfortunately we were getting confused with, that the principle is initiation of proceedings is not at the stage of summon. Initiation of proceeding is at the stage of show cause notice. So therefore, unless the show cause notice is issued, both the authorities can certainly proceed with their own intelligence. And then once a show cause notice is issued by one of the authority, the other authority will not be able to proceed further. This is how, and they will not automatically stop. You will have to intimate them, look, sir, I've already received a show cause notice on the same cause of action. So this was a judgment of Supreme Court. SLP number was 6092 of 2025, and the date of the judgment was 14th August 2025. Now let us move to another stage. Now, friends, we all have come across a situation wherein we have made certain purchases. And now the department is alleging that the person from whom you have made purchases is non-existent, or he is a non-genuine taxpayer. This is the allegation, that he is a non-genuine taxpayer. Or they will say that payment of tax. So whatever tax you have paid to him and you have availed credit thereof, the supplier has not made the payment. So the point is of 16(2)(c). Now 16, you all are aware that section 16 subsection 1 says that when there is any tax charged, by the supplier on the supplies made to you, whether it is input or input services or capital goods, you are eligible to claim that credit. So you very well can claim that credit, but then comes section 16(2), which has an overriding, that is a non-obstant clause, which says that unless you satisfy the following conditions,
What happened?
I think sir का net.
Some network issue?
condition.
Sanket ji,
So there was a network issue. The last wording you said, a humble request to repeat.
16.2. Section 16.2. He was on section 16.2.
Sure. I'm sorry.
No issues, sir. No issues.
Point was 16.1 says that whenever a tax is charged to you, whether it is on input or input services or capital goods, you are eligible to claim that input tax credit of the tax that has been charged to you, provided it is for the purpose of business, that is, it is intended to be used in course or furtherance of business. That is what is the provision all about. But we cannot use or read this provision in isolation. There are certain conditions prescribed by the statute in section 16, subsection 2, and which starts with a non-obstant clause, which is a overriding clause, notwithstanding anything contained under this act, something like this, or under this section. Now, there are certain conditions which have to be satisfied. One of those conditions is that your supplier has not paid the liability either in cash or by way of a eligible input tax credit. So the tax which he has collected from you when you made the purchase, that tax has not been paid out of his cash ledger or out of his illicit or licit legible or legal credit ledger or credits. So this is section 16, subsection 2, clause C. Friends, identical provision was there in Delhi VAT and in multiple VATs, in Gujarat VAT, in multiple states, in the VAT regime, the identical provision was there. So in Delhi VAT, there was a judgment of, initially the judgment was on-quest. Now in on-quest judgment, the Delhi High Court has said that this law, that means the supplier has not paid, may not be made applicable to the bona fide purchasers. It should not be made applicable to the bona fide purchasers. This was the observation of Delhi High Court. The matter went to the Supreme Court. Delhi High Court was in favor of the assessees. The court, the revenue, the department went to the Supreme Court. Now, Supreme Court has dismissed the petition, dismissed the SLP. Now, there was another judgment which has been recently pronounced, and that judgment was Shanti Kiran India Private Limited. Now, in Shanti Kiran India Private Limited, again, the same question was there, which is absolutely identical. I'll say para materia to 16.2C. So in Shanti Kiran also the same observation was taken by the Delhi High Court, wherein the Honorable Delhi High Court has said that bona fide purchaser cannot be denied the ITC if transactions are found to be genuine. Now, friends, please appreciate, there is a difference between reading down a provision and declaring it ultra vires. So courts have said that this provision, including 16.2C and the Delhi VAT in Shanti Kiran, these provisions are valid provisions. But these provisions cannot be applied in the same manner to bona fide purchasers as well as to the tainted purchasers. That is the discrimination which is there, that both the purchasers are getting treatment on the same manner, same way. That is not the idea in Article 14. If I'm a bona fide purchaser and being punished, and if a person who is not a bona fide purchaser, he is also getting the same punishment, this is not permissible. And therefore, they have read down the provision. They have not declared it ultra vires. They have read down the provision that please apply the provision to the facts of the case. And if you find finally that the purchaser was a bona fide genuine purchaser, he has no connivance with the supplier. There was no link of these two people at any point in time. Then you cannot deny the input tax credit. That was the observation of the Delhi High Court, and now the Honorable Supreme Court in Shanti Kiran India Private Limited. The judgment has been pronounced on 9th of October 2025 in SLP of Shanti Kiran, which was filed by the department. Now, another very important aspect. See, I was mandated that I need to cover not only the judgment, but also the impact. I need to share the impact of those judgments in today's regime, today's situation. I have come across many notices saying that your supplier registration is cancelled. Your supplier's registration is cancelled, and therefore we have the reason to believe that the supplier was never existent. And since the supplier was never existent, the purchases are doubtful. It is only a sham transaction, and therefore the ITC that you are claiming is devoid of the conditions. You have not complied with the conditions of 16.2, and therefore the reversal of ITC is required. This is what is the present scenario wherein we are getting notices time and again and in bulk. I'll say I have observed certain cases, friends, wherein this judgment is squarely applicable, but if my supplier's registration is cancelled, then also they will say your ITC is ineligible. If my recipient, that means to whom I have supplied the goods, if his registration is cancelled, then also they will say that it is a transaction which is sham transaction, bogus transaction. You have never supplied the goods because the registration is cancelled. Sir, they do not appreciate, or the point to be appreciated here is that there can be n number of reasons because of which the registration of supplier or the registration of recipient gets cancelled. Multiple situations I have seen wherein he was a proprietor. Now that proprietorship is converted into a partnership, or maybe it is converted into a private limited company. Because of that, he has cancelled his registration. Now, where is the question of saying that he was never existent and therefore the ITC needs to be reversed? Why I'm saying this and why I'm trying to cover this is, please go and read Shanti Kiran judgment. In Shanti Kiran India Private Limited, there is one paragraph which specifically deals with this. There is a specific observation that mere cancellation of registration cannot be the basis of denial of input tax credit. I'm repeating. Mere cancellation of the supplier's registration cannot be the basis of denial of the input tax credit, meaning thereby you have to look into the facts of the case, look into the genuinity of the transactions, look into the circumstances under which the transactions have been entered into, and also look into the supplier's integrity and the situation in which the registration got cancelled. Also, you need to look into that when you made the purchase and when his registration was cancelled, irrespective of the fact that his registration was cancelled retrospectively, will not mean that I am a tainted purchaser and therefore ineligible to claim ITC. That is what is coming out as an observation from Shanti Kiran India Limited, Private Limited, by the Honorable Apex Court. So therefore, this judgment is very important for two counts, and we need to follow this judgment. And I'm sorry to say this, but this is what is we have to follow. That not only these judgments are relevant for the Delhi VAT or the VAT system, but these are more relevant in GST regime, because in GST regime, the kind of notices that we are facing are humongous, are terrific numbers. So therefore, two grounds can be very well argued upon when we come to this Shanti Kiran India Private Limited. One, that supplier has not discharged his liability, but I have discharged my tax liability to him during the course of purchase. Now, it is your duty, that is the department's duty. They have to discharge that I was having a connivance with my supplier, and therefore the purchases were not genuine, and therefore the ITC needs to be reversed on his non-payment of tax. Otherwise, even the GST Council minutes have said that first attempt should be to recover from the suppliers. All bona fide efforts must be taken by the department to recover the amount from supplier. If after applying all efforts, the supplier has not paid, then only you can come to the recipient. For this also you can refer D.Y. Bethel, the Madurai bench of Madras High Court. That judgment also says this. Suncraft, Calcutta High Court, which traveled to Supreme Court, that also more or less say this, that unless you take an action against the tainted supplier or the bogus supplier, you cannot come directly to the recipient saying that, look, he has not paid the tax, so therefore you make the payment of tax. That is not permissible in law. So this is one principle which is emerging, that bona fide purchaser should not be denied the input tax credit. This is one. And second is, merely because the registration of the supplier was cancelled, it cannot be a sole reason for denying the input tax credit to the buyer. And that is something which is a very important proposition, very important observation of Shanti Kiran India Private Limited by the Honorable Apex Court, because nowadays a lot of notices are coming merely because the registrations are cancelled later on by of the supplier. May it be retrospective, may it be prospectively. They simply will say that their registration is cancelled and therefore you have to reverse the input tax credit. Now, after that Supreme Court, there is recent judgment of Sahil Enterprises versus Union of India. The Tripura High Court have delivered this particular judgment, wherein they have also read down the provisions of Section 16(1)(c), and they have said, identically, they have said that registration, cancellation, or maybe the bona fide purchases cannot be the reason for cancellation or for denial of the input tax credit. So Sahil Enterprises in GST regime, Tripura High Court have already discussed and read down Section 16(2)(c), wherein they have said a bona fide purchaser cannot be denied the input tax credit. So please follow this judgment. It is writ petition number 68 of 2026. It was delivered on 6th of January 2026, wherein the Honorable Tripura High Court have declared Section 16(2)(c), or I'll say not declared as ultra vires, but read down the provision saying that you apply this provision to the facts of a particular case. Do not apply this provision blindly. Apply to the facts. If you find that this purchaser is not a bona fide purchaser, then you ask him to reverse the input tax credit. If he is a bona fide purchaser, then you cannot ask for the reversal of the input tax credit. So this is the second judgment which I wanted to cover. Now, third judgment, which is again related to somewhere related to the input tax credit only, is it was delivered by Bombay High Court. After Bombay High Court, even recently, Gujarat High Court has also delivered a similar judgment, and that judgment is Umicore AutoCAT India Private Limited. 463, the writ petition number is 463 of 2024, and it was delivered on 10th of July 2025. This is an important judgment as per me. The Goa bench of Bombay High Court has pronounced this judgment, and the observation and the proposition or the law laid down is like this. First, let us see the controversy. Friends, we all are aware that whenever there is change in constitution, there is a specific provision in law, section 18, subsection 3 of the CGST or State Act. Now, the provision is that whenever there is a change in constitution means you are getting converted into another constitution, meaning thereby from partnership to maybe private limited company by virtue of law. You are getting merged or amalgamated with another company. You are getting demerged. In all these situations, what will happen to the input tax credit that is lying in the in the electronic credit ledger of the company? which is, let's say, getting amalgamated or merged, or which is getting demerged. We all are aware Section 18(3) lays down law which says that it is permissible, sir, that whenever AB Limited is there, and out of this A Limited goes out, or A Limited and B Limited are there, and then they are constituting, merging together and making it AB Limited, or B Limited gets merged with A Limited, and now it is A Limited, B Limited is not there. In that situation, whatever credit will be of the company which is getting amalgamated, for example, in my example, A and B is getting merged with A, then B Limited. So whatever credit is there of B, that will be transferred by way of a form which is ITC 02 to be filled, and it will be transferred to the resulting company which is A Limited. Now, fair enough. If we apply this particular section, if this particular provision, within the state, there is no problem. For example, if you are, let's say, in the state of Gujarat, and in the state of Gujarat, your company gets merged with the another company in the state of Gujarat. No problem at all. There is no problem. But when it comes to a company in Gujarat getting merged with a company in, let's say, Delhi, or let's say in Bombay, then the credit which is there in Gujarat, can it be transferred to the company which is the resulting company at Maharashtra or at Bombay? So there was an artificial restriction in the portal. What has happened in this case, Umicore AutoCAD India Private Limited, a company was there in Goa which merged with the company at Bombay. Now there was a credit of X rupees in Goa. They wanted to transfer that credit because the provision section 18 subsection 3 has no restriction. It does not say that it has to be transferred within the state. It cannot be transferred outside the state. That was not there. Rather, that is not there. But when they tried to fill that form, there was an error that both the transferor and transferee are not in the same state. I'm repeating, both the transferor and the transferee are not in the same state, and therefore the credit of the transferor company cannot be permitted. That was the message that was coming when I was trying to fill that ITC 02 form. I mean, the Goa company was trying to fill that ITC 02 form to transfer the credits to the Bombay company. Now, they tried. They also contacted the GST council. They also contacted the GST grievance cell and all. But there was no solution because this was finally led by GSTN, and GSTN was not allowing this. And we all are aware that now any officer or anybody would say it is a system-based thing, sir. We cannot do anything. So that is what the reply was. Then what this assessee did, they approached the Goa bench of Bombay High Court, saying, sir, the action of GSTN of restricting the transfer of credit from the state of Goa to the state of Bombay or Maharashtra is impermissible, sir. At least when it comes to IGST or CGST, state we can understand that state transfer may be requiring a lot of documents, although I am of a view that even state transfer credit has to be transferred. I can explain that, but that is not the purpose today of this particular session. So therefore, I'll not be dragging into that. But what is the judgment and what was the proposition let down by the court? That is what is intended to be discussed in this session. So the Goa bench said, sir, when there is no restriction in the statute, in the policy, in the legislature, that means the intention of the lawmakers is very clear. And also, you cannot have a artificial restriction saying that we will say how to do business, and therefore we will say to whom you should merge. You have to, if you want to merge, if you want to amalgamate, it has to be within the state. You cannot go outside the state. That is impermissible. That means you are ruling my business. I can do business anywhere, and therefore I can merge with anyone. Sitting in Gujarat today, I can get merged with a person sitting in South. Where is the question of restricting that? And if there was any restriction which was intended, it has to come out from the statute. Nothing is coming out from the statute, so therefore the restriction which was there in the GSTN was not in accordance with law. This is how we argued the matter. This is how the Petitioners' Council argued the matter. The Honorable Bombay High Court has said, you are right. The artificial restriction cannot be there. More specifically, when it comes to the CGST and IGST, it has to be transferred to the person or to the company which is resulting company in the state in which it is getting merged. So the Goa bench have upheld and they have said that 18.3 does not restrict any such transfers from one state to another. Therefore, the GSTN or YTC 02 cannot have such restrictions. And this is how the Goa bench has allowed the petition and allowed the transfer from Goa to Bombay. Now, the identical issue emerged in Gujarat High Court also recently, and Gujarat High Court has followed this particular judgment, and accordingly, the judgment has been pronounced that the credit from one state to another must be transferred in case of amalgamation, sale, demerger, or the change of constitution. There is no restriction in section 18 subsection 3, and therefore there cannot be an artificial restriction by way of rules or by way of GSTN. So that is Umicore AutoCat India Private Limited. Now after this, let us move to another very important pertinent issue, which is partially decided by the Supreme Court and which is also pending in the Supreme Court. See, there initially when GST came, this particular issue was decided by the Odisha High Court. In the Odisha High Court, the question was that when we are filing an appeal and we are required to pay pre-deposit, can that pre-deposit be paid from the credit ledger, or is it mandatory to make the pre-deposit or make the payment of pre-deposit only in cash? So if I'm not wrong, the judgment was Jyoti Construction. The Honorable Odisha High Court have taken a view that no, the payment has to be done by cash only when it comes to pre-deposit. The same view was taken by Patna High Court in many, or rather I would say in batch petitions. Flipkart was the lead judgment, if I'm not wrong, wherein this Patna High Court has taken a view that credit ledger cannot be used for making the payment of pre-deposit. It has to be out of the cash ledger. That was the view taken by the Patna High Court. But there was a contrary view which was taken by Bombay High Court, which was followed by Gujarat High Court. So Oasis Reality was the judgment of Bombay High Court. It was followed in Shiv Crackers by Gujarat High Court. And the contradiction judgment was the Jyoti Construction and this Flipkart of Patna High Court and Odisha High Court. The matter went to the Supreme Court. In the meanwhile, when Shiv Crackers was pronounced, after Shiv Crackers, following Shiv Crackers, there was another judgment of Yasho Industries. Now that Yasho Industries was Gujarat High Court judgment, it traveled to the Supreme Court. Shiv Crackers was also there, Patna High Court batch was also there, and Bombay High Court was also there. All these matters went to the Supreme Court. Before Shiv Crackers or before the Patna High Court, that Flipkart and all the group could have been heard and adjudicated, the Honorable Apex Court has decided Yasho Industries. And in Yasho Industries, they have upheld the judgment of Gujarat High Court. So therefore, the Supreme Court has observed that yes, credit balance or credit ledger balance can be utilized for making the pre-deposit of for appeals. So if you are having the balance in your electronic credit ledger and you have to pay the pre-deposit, then you can certainly make the payment of pre-deposit using the electronic credit ledger. So from Gujarat, it was Yasho Industries, Shiv Crackers, Oasis Reality from Bombay High Court, Jyoti Construction from Odisha High Court, and Flipkart from Patna High Court. So these are couple of judgments which are relevant. Now, Shiv Crackers and the entire group is pending before the Honorable Supreme Court. But Yasho Industries have been adjudicated by the Supreme Court, wherein Gujarat High Court judgment has been upheld by them. So therefore, as per my limited understanding, I would say that unless that judgment is declared as per incurium, the judgment of Yasho Industries, that judgment holds the water. And therefore, today the law is that pre-deposit can be paid from electronic credit ledger. This is pending before Supreme Court. Even the earlier judgment that we have discussed, that Umicor is also pending before the Supreme Court. Now let us try to let me say this also. Now in one of the cases like Flipkart, in one of the cases of the group of Patna High Court, they have recovered the entire amount. Let's say the pre-deposit was to be paid as 1 crore rupees. The order was of 10 crores. They recovered the entire 10 crores. Now, Supreme Court, while hearing this group of matters, have also observed. So therefore, there also comes a very important principle which you all must know. Supreme Court said that pre-deposit was only 10%, which was the requirement. That means if an order is of 10 crores, you are supposed to retain 1 crore rupees. 9 crores which you have recovered already. So they have recovered the entire 10 crores. 9 crores that has been recovered needs to be refunded back to the taxpayers. So this is what Supreme Court said in this batch of Shiv Crackers and the Flipkart. I hope you are able to get it, that if excess pre-deposit is there, or let's say they have initiated recovery in 2 months, they've recovered 50%, then you are filing an appeal, then they can retain only 10%, rest of the 40% they will have to refund as per the order of this particular judgment of the Honorable, I'll not say judgment, interim relief of the Supreme Court. So please note this. This is relevant because at times it happens that, I'll give an example. There was an order of 10 crore rupees. You pay 1 crore rupees at the first appellate stage. Now that order of 10 crores has been reduced to, let's say, 1 crore rupees. So at the stage of tribunal, again, 10% you will have to pay, which is 10 lakh rupees. You had already paid 1 crore rupees. The question is whether you are supposed to pay 10 lakh rupees. If we read section 112, the answer is yes. So it says, in addition to what you have paid, the law says, in addition to what you have paid as a pre-deposit for 107. So 1 crore rupee you have paid, 10 lakhs more you will have to pay because now the order is of 1 crore rupees. So therefore 10% will be 10 lakh rupees. But if we read that law, the way in which it is written, so it will be that they will collect 1 crore 10 lakh rupees against the liability of 1 crore which is disputed, which as per me is impermissible. This is a question which needs to be examined, and the courts in the times to come will decide on this. But my understanding is that you are not supposed to pay that additional 10%. Rather, you can claim the refund of 80 lakhs because 20 lakhs is the maximum of on 1 crore 20% that has to be as a pre-deposit. That 80 lakhs which has already been paid extra can be claimed as a refund. So to an extent, this proposition has been laid down by the Honorable Apex Court in this group of Flipkart. wherein the mute or the parent question was, can a pre-deposit be paid out of electronic credit ledger? But at the same time, when there is an excess recovery being done, then that amount which is over and above that pre-deposit which you are supposed to pay must be refunded or shall be refunded, is what Supreme Court has said as an interim relief. So therefore, I'll say that needs to be followed, and that has to be followed. So this is one thing that I wanted to cover. Now, next, another very short issue I'll take up. The short issue is like this. I hope I'm audible, no? There is some
Yes,
disturbance.
sir, you are audible.
Yes, sir. Audible, sir.
Audible, sir, audible.
Yeah. Sorry. Now, yeah. Now, next issue is again very relevant, I would say, because there is an very important proposition which comes out of it. See, please understand, if something is written in law, we as the creature of the statute are bound to follow it. It is not only applicable in our case, it is also applicable in the case of the department. Law is not one-sided. Law is for both parties. If we have to follow, if they have certain obligations, they also have to follow. Both have to meet their obligations. That is what is the principle which has to be there. Now, Section 129. We all are aware what is Section 129? Section 129 deals with the interception of goods and conveyance, verification thereof, and detention thereof if it is required that the procedure or the documents which were supposed to be there are not there. Now, there is one judgment of all cargo. This all cargo judgment deals with a very important principle. So we'll be discussing on the principle. There are multiple judgments, but all cargo will try to understand. All cargo and Revan creation. What is this? Sir, Section 129, subsection 3, if we read, it says that if you detain goods, you will have to issue a notice within 7 days of such detention. And after the issuance of notice, I'll say serving of notice, from the date of service of notice, within 7 days, you will have to pass the order. Therefore, if I am detaining the goods, let's say goods and conveyance on 1st of any month, the maximum time limit for issuance of notice would be 7 days. That means 7th of the month. And if I'm serving the notice, let's say on 8th, then maximum time limit within which the order has to be passed would be 15th of the month. Now, if the authorities, generally we miss on this, we should take care of this very, very cautiously and very, very diligently. If the detention was there on 1st, and if the show cause notice is issued on 8th, or the second situation is the detention was on 1st, the show cause notice was issued on 7th, it was served on 8th, but the order was issued on 16th. In both scenario, where there is a delay of 1 day in issuance of show cause notice, or when there is a delay of 1 day in issuance of order, in both these scenarios, the jurisdiction will fail. The authority's jurisdiction will fail, and therefore the show cause notice as one scenario number 1, or the order as scenario number 2, will be deemed to be, or rather will become void. It will be time barred. And on the basis of time barred, it will become unsustainable. So that is what is the principle which is laid down in all cargo by Gujarat High Court, saying that even if delay of 1 day is impermissible. So therefore, if we file an appeal with a delay of 1 day, After that 120 days, the Gujarat High Court in Agrawal Enterprises recently have said, see, I'm giving names of the judgment. You can note down those names. So in Gujarat High Court in Agrawal Enterprises have laid down the principle that if there is a delay of beyond condonable period, I hope you are aware what is the condonable period. 90 days or 3 months for filing an appeal. If there is sufficient cause, then 1 month condonation is permissible. If the delay is more than 1 month, even for a fraction of minute, let's say 12 it closes and 12:01 you have uploaded the appeal, it becomes time barred. And Agrawal Enterprises, the Honorable Gujarat High Court has said, a time barred appeal, that means a period which cannot be condoned in the as per the statute, cannot be condoned even by the High Court in Article 226 of the Constitution of India. We may dispute this proposition because there are courts like Madras High Court and there are other Allahabad High Court and all. They are giving the liberty, they are taking a call. But as per they have followed, the Gujarat High Court in Agrawal Enterprise have followed the judgment of GlaxoSmithKline by Supreme Court. And following that judgment, they have said that no, nothing doing. A writ is maintainable. A writ, I'll come to this. Let me explain this. I'll take 1 minute. A writ against an order is not maintainable. I'm repeating, a writ against an order is not maintainable if there is a alternative remedy available in the statute, meaning thereby if there is an alternate remedy, that is of appeal, you are allowed to file an appeal against an order in the statute or by the statute, then the writ is not maintainable in normal circumstances. There are certain exceptions which are given in commercial steel judgment, in Vodafone. Multiple judgments are there, but commercial steel is the recent one, wherein there are a couple of exceptions which are given, that writ is otherwise not maintainable whenever there is a statutory remedy. But when you challenge the virus, when there is a violation of principles of natural justice, when the orders are without jurisdiction, you can go to the writ court. So those are exceptions wherein the writ is maintainable. But even in that case, you will have to approach the writ court within the appealable period. That means 3 months plus 1 month condonation period. Maximum 4 months you will have to approach the writ court under Article 226 of the Constitution of India. If you do not do that, you miss the opportunity, and the writ which was otherwise maintainable will become non-maintainable. That is what is being the proposition in GlaxoSmithKline. That is what has been proposed by the Supreme Court. In Agrawal Enterprises, the Supreme Court has taken this view. The Gujarat High Court has taken this view following GlaxoSmith, saying that if there is a delay of even 1 day, the High Court under Article 226 does not have the power to condone that delay beyond the statute period. So it's a very dangerous judgment, very dangerous proposition. Let us see what happens in Supreme Court. But this is what is the judgment as it stands as on date. Identical judgments are there of multiple high courts, but at the same time, there are contrary judgments also. So in all cargo, the same principle has been applied. When it is said that if Section 129, subsection 3 says 7 days, it cannot be 8th day. If 129.3 says that after 7 days service of notice, within 7 days, they have to pass the order, it cannot be more than those 15 days or 14 days, whatsoever it is. If even 1 day delay is there, the order become time barred, and therefore they will have to reverse the action that they have taken. Then there is another judgment of Rivan creation. Again, it is a good decision, I would say. Both are reported judgments. Now, what is this judgment about? These are small orders, small judgments, but laying down a very important principle of law, and therefore I'm trying to cover it. And these are recent ones. Now, Rivan creation, the facts are like this. the department has initiated search action against Revan Creation. During the course of search under section 67(2), they found certain gold, certain cash, and they've seized that gold and cash from Revan Creation. Revan Creation was the trader of gold. Now we all are aware that there is a provision under section 67(7) which says that once you seize, then within 6 months you will have to issue a show cause notice. That why it should not be confiscated. It cannot be a blanket seizure. In this case, in Revan Creation, they seized in around 2022 or 23. Till 2025, we were continuously following up with them. The petitioner was trying to follow up with them. Ki, look, sir, it has been 3 years, it has been 2 years. Please return after our gold and cash. Cash, otherwise you cannot retain. But they were not doing it. So the petitioner went to the High Court. Gujarat High Court has taken a view that this is impermissible. If you are supposed to issue a show cause notice, which you choose, which you have chosen, that you are not issuing show cause notice within the time limit specified in the Act, which is 6 months, which cannot be extended further. Maximum 6 months can further be extended as per the statute, or whatever is the time limit for which they can statute. The principle is, beyond that time limit, you could not have detained or kept those goods or cash in seizure. So the principle again would be, if a statute prescribes a period, it has to be followed diligently. If that period is to be followed by the taxpayer will have to follow. If it has to be followed by the departmental authorities, then it has to be followed by the departmental authorities in true letter and spirit. They cannot deviate at any situation. So this is what is Revan Creation. The court has come down very heavily on that officers who have seized these goods, the gold and the cash. And even the inquiry was ordered by the court that there has to be a proper inquiry against that officer who has not issued the show cause notice. But at the same time, the relief was given to the petitioner that since he has not issued the show cause notice beyond the permissible time limit, now these goods and cash has to be returned back. So the principle in all cargo, the principle in Glaxo India, the principle in Agrawal Enterprises. So I'll give all cargo, Gujarat High Court, Glaxo India, Supreme Court, Agrawal Enterprises, latest judgment of Gujarat High Court, and Revan Creation, Gujarat High Court. All these judgments lays down a principle that if there is a particular time limit within which a particular act has to be done, and that act has not been done, then even writ court cannot protect it. If there is a delay beyond condonable period, a writ court under Article 226 cannot condone it further. If there was an order which was supposed to be passed on a particular date or within a particular time limit and the order has not been passed, then the writ court cannot protect that. And therefore, that order or notice must go, being a time barred. So these are the propositions which are laid down in these particular judgments. Linked with this judgment, I'll also travel and touch upon two more judgments. In Revan Creation, I've said there was a seizure of gold and there was a seizure of cash. So the question is, now this is not dealt with in Revan Creation because Revan Creation has been allowed in 67 because the show cause notice was not issued within the time limit. But whether the cash can be seized, that is the another question. Whether it is permissible that the cash can be seized, because when we read section 67(2), it says that goods, books, or things. So it is not goods, cash is not goods, cash is not books. So whether it is things, whether it is following into the or following within the word things, and therefore it can be seized or not. So in Shabu George is the judgment of Kerala High Court, which traveled to the Supreme Court. The Supreme Court has said that cash cannot be seized. There cannot be a seizure of cash. So Shabu George, you can remember, is a judgment which says that cash is not permitted to be seized and retained by the department in GST. They can do another things. They can give it to income tax department. They can inform whatsoever they want to do. they can do. But under Section 67(2), the seizure of cash is not permissible. And another very important judgment linked with this of the apex court, Supreme Court, is ASP traders. What happens is, Section 129 has a provision which says that if there is a interception and detention of goods, then for release of that particular conveyance and goods, you can make the payment of penalty as per Section 129 subsection 1. And then it says, if you make the payment, then the proceedings will get concluded. So what was happening is, when the person's conveyance and goods were getting seized, now he has to transfer it, or he has to hand it over or deliver it to the recipient. So in that hurry or in that urgency, he made the payment under Section 129(1). 200% of the penalty has been paid. A department will not issue show cause notice. They will say now it is concluded. ASP traders had dealt with this issue, wherein the Honorable Justice has said that mere payment does not mean that they have admitted and they have paid it. So therefore, even after the payment has been made, irrespective of the fact whether it is admitted and then paid or inadmitted then paid, you have to issue the show cause notice. So very important principle, very important proposition which has been laid down by the Honorable Apex Court is that don't consider the payment as admission and therefore the conclusion of proceedings. You will have to issue a show cause notice, more specifically when the client asks or when the assessee asked for that. So therefore, issue a show cause notice, adjudicate, and therefore thereafter you can appropriate the entire amount which has been paid by them if it is found correct, so that his right of appeal continues. See, please appreciate there is a years old judgment, 1953 judgment, which says that right of appeal is a vested right. It is a vested right. The moment litigation begins and the show cause notice comes to you for adjudication, the right of appeal is vested on you. So therefore, when an action of interception and detention is taken, and the payment has been made, but there is no show cause notice which is issued, so that means the proceedings are concluded. So my right of challenging that action goes away, and my right of appeal goes away, which has already been vested the moment this action has initiated. So there is a judgment of 1953. I'll connect this with one more very important aspect here. And that aspect is that we all are aware that there is an amendment in Section 107 subsection 6, and a proviso has been inserted. That proviso says that if there is only penalty proposed in law, if there is only penalty proposed in an order, then 10% of that penalty has to be paid. Now we all are coming across a lot of orders wherein the penalty is of 50 crores, 10 crores, 1 crore, 100 crores, so on and so forth. So therefore the question is, if the issue is of 17, 18, let's say 17, 18, 19 till 2021, 22, am I required to pay pre-deposit for filing an appeal against the order which is covering the period 17, 18 till 2022, and wherein only proposition of penalty is there, or the adjudication order says only penalty is levied? My understanding says, if we read the proposition of law, if we read the Supreme Court judgments right from 1952 onwards, the Supreme Court has said, time and again said, that the right of appeal is a vested right, and therefore it vests on the day when the issue arises. So if it is a vested right and the issue has already arisen long back in 2022 or 2017-18, where is the question of making the penalty of 10% or pre-deposit of 10% on those penalties today? So I'm of the belief that in all those situations wherein the penalty orders are there, from 1st October 2025, there is a proviso which has been inserted in Section 107 subsection 6. I am of the view that penalty or pre-deposit on such penalty orders will not be applicable, and therefore we can file the petition without any pre-deposit. Let us move ahead. Another issue which I would like to cover here would be, which is linked with this penalty discussion that we are doing, is a judgment of Patanjali. Now, friends, we all are aware that in Patanjali, the Allahabad High Court has taken a view. And the question was like this, because we need to understand this it's a very important proposition and very important issue to be deliberated. And a lot of courts are handling this issue and examining this issue. But Allahabad High Court has already adjudicated this issue. So therefore, I'm trying to cover that. And then I'll give my view also on this, how we can approach and what should be the future approach when we are facing such notices of section 122 and all. Friends, in Patanjali, the Patanjali Ayurved Limited, it is writ tax number 1603 of 2024, the judgment of division bench of the Allahabad High Court. The question before the court was twofolds. One, section 122 penalty, whether it is a criminal penalty or a civil penalty. And the second question was that when the proceedings under section 74 are dropped, can section 122 penalty be levied? These were the two questions. Most of us are receiving show cause notices based on circular number 171 or any other circular of the department wherein the imposition of penalty under section 122 is there. And therefore, to handle all these cases, this Patanjali Ayurved Limited judgment is very important, and there are other judgments in pipeline which are being argued before the courts. But since Patanjali has already been adjudicated by the Allahabad High Court and traveled to the Supreme Court has already stayed this Allahabad High Court order. Therefore, it becomes relevant. The first question which was argued was that section 122 is not a civil penalty, it's a criminal penalty, and therefore no adjudicating authority from the GST office can levy section 122 penalty. It can be levied only by the magistrate who is doing the trial of the offense under section 132. So the argument flows like this, that section 122 onwards are all criminal proceedings against the offenses, and therefore when the trial will begin for the offenses which are there in 132 and the punishments are mentioned, then that magistrate will be in a position to impose the penalty. That magistrate will only be in a position to impose the penalty and not the departmental authority. That is section 122. That is for 122. That was the first argument. Second argument was that how a penalty can be invoked or imposed when there is no liability of tax. Because 122, when it concludes, it says 100 equivalent amount of the tax evaded or the amount of tax evaded, input tax credit availed or utilized. These are the phrases which are used under section 122 or 10,000 rupees, whichever is higher. So there has to be tax evasion. If there is no tax evasion, where is the question of 122? So the another second question was that if section 74 proceedings are dropped, if section 74 proceedings are dropped, can penalty be levied under section 122? Both the questions were given in affirmative by the Allahabad High Court. The answers were in affirmative, and therefore the writ petition was dismissed. And it was said that 122 is a civil penalty. And two, that even after the droppage of section 74 proceedings, section 122 being an independent provision can continue. So this was the judgment of Allahabad High Court. It went to the Supreme Court. Supreme Court has stayed this order, and therefore now today there is no such order in operation of any court which says that 122 is independent. It's a civil penalty and it can continue independently even after the dropping of tax liability in Section 74. There are other courts which are examining this issue, and we'll have to wait till that order gets examined, till that issue gets examined and the order is issued. So this was Patanjali Ayurved Limited by Allahabad High Court in writ tax number 1603 of 2024. It's a recent judgment, and then it went to the Supreme Court, and Supreme Court has stayed it. Now, another important judgment, as per my understanding, would be with respect to Section 83. See, we are observing time and again that the department, in order to protect the revenue, is attaching the bank accounts provisionally or attaching the properties provisionally. They say that Section 83 gives us the power where we have reasons to believe that if we do not attach the property, including bank accounts today, the petitioner or it may become difficult for us to recover the amount. On this pretext, on this belief, they have been empowered to attach the bank accounts and the properties. But we all are aware how they apply their mind and how wisely they are making use of their powers. So therefore, we were observing and we were noting that on a regular basis, the issues were faced by the taxpayers and they were attaching the bank accounts like anything. So in that context, there was a judgment of Supreme Court which has laid down various principles and which was Radha Krishna Industries. It's a very important judgment. Radha Krishna Industries was following one judgment of Velarius Industries of Gujarat High Court. Now, Radha Industries in para 72 has laid down certain guidelines wherein they have said when you can attach the properties. I'll not be going into that in much detail because it's a very celebrated judgment and I presume that we all are aware. But that Radha Krishna Industries, to be in the nutshell, I would mention, has said that this is a draconian power and therefore it has to be used with utmost caution. This is a draconian power and therefore it has to be used with utmost caution. We cannot use it unwisely or so easily. That is not permissible. We'll have to use it wisely. We have to have the strong reason to believe that he is going to run away and it is not going to be, and that needs to be recorded. You have to record this, which is said to be satisfaction note. You will have to record this in satisfaction note and then say that therefore, on the basis of the above satisfaction, I am now satisfied that the attachment is compulsory. Generally, that is not being followed. That is not being followed at the department level. This is one thing which has been dealt with in Radha Krishna Industries. But more dangerous was that Section 83, subsection 2 says that if a provisional attachment has been done, then provisional attachment will outlive its life. I'm repeating, provisional attachment will outlive its life in 1 year. And there is no provision like Section 281B of the Income Tax Act. There is a provision which says it has to be attached for this period. And if further it has to be extended, then it can be extended by so and so person for this period. This provision is missing. This provision is totally missing when it comes to Section 83, subsection 2. Question which was there before High Court was that can there be a fresh attachment after the completion of 1 year? I'm repeating, can there be a fresh attachment after the completion of 1 year? The Honorable Gujarat High Court in Kesri Nandan Mobile, the Honorable High Court, Gujarat High Court in Kesri Nandan Mobile has said that yes, a fresh attachment with fresh reasons to believe can be issued and the attachment can be done. Meaning thereby, even after completion of 1 year, the attachment can be continued provided they issue a fresh attachment order with fresh reasons. That is what was laid down by the Honorable Gujarat High Court in Kesri Nandan Mobile. Now this matter went to the Supreme Court. Supreme Court has laid down a principle wherein they have said that forget about the fresh reasons, forget about the fresh reasons to believe or recording of those reasons. It is not permissible at all. Meaning thereby, once 1 year gets completed, there is no possibility in law, there is no jurisdiction in law which is given to that authority to further issue a fresh attachment order, because that is not the intention of the lawmaker. Had it been the intention, there would have been a provision saying that if the attachment concludes in 1 year, or if it is further to be extended, then with the permission of so and so, it can be further extended for 6 months, 3 months, whatever time limit. It is not there. So therefore, it is not permissible. And even there is an amendment in Rule 149, which says that after completion of 1 year, it has to give an information to the banker, to the assessee, saying that now it is lifted. So therefore, following this, the Honorable Supreme Court in Kesri Nandan Mobile, in loud words, have said that after completion of 1 year, that is after the satisfaction or after the outliving of the statutory period of 1 year, as per section 83(2), there cannot be the continuation of attachment, provisional attachment, and also there cannot be a fresh attachment. So this is what was adjudicated by the Honorable Supreme Court on 14th August 2025. I'll say a very important judgment when it comes to section 83, because many of us might be facing this issue wherein 1 year has been over and they will again issue an attachment letter or again issue DRC 22 or whatever form is there, saying that this is the extension of the attachment because of these reasons. So as per Kesri Nandan Mobile, that is impermissible, that is not permitted. Now after this, let me take you to another important issue, which is in 86 capital A. We all are aware section 86 capital A, what is it? It is the blocking of input tax credit ledger or the electronic credit ledger. Now there are a lot of controversial judgments or contradictory judgment. Allahabad High Court, Calcutta High Court. These two high courts have taken a contrary view. Then the view that was taken by the Gujarat High Court, Bombay High Court, and Delhi High Court. So I'll say Samay alloys with the principal lead judgment of Gujarat High Court. Samay alloys. Rest, everything will follow. That was the first judgment wherein the Honorable Gujarat High Court have said, sir, you are saying that I have made purchases from bogus suppliers or my input tax credit is ineligible, and therefore you are blocking that input tax credit so that I cannot utilize that input tax credit for making the payment of my output tax liability as per section 49. Fair enough. But please appreciate that the word which is used is the available credit in electronic credit ledger can be blocked. So therefore, if there is an allegation that the purchases of 10 crores were bogus and therefore 18% was the tax liability, 1 crore 80 lakhs needs to be questioned. And I have a balance of only 40 lakh rupees in my electronic credit ledger, you cannot have the negative blocking, because that will lead to recovery. How it is leading to recovery, I'll come to that. So negative blocking, the point is negative blocking was not permitted or is not permitted in the statute. That is what is the law which is laid down by Gujarat High Court, followed by Bombay High Court and by Delhi High Court in bulk of matters, contradicted by Calcutta High Court and Allahabad High Court. Allahabad and Calcutta said, no, negative blocking is permissible. Wherein Gujarat said, please understand, There is a liability which you are saying of 1 crore 80 lakhs. There is only balance of 40 lakhs of old purchases, old input tax credit. Now, attaching it to an extent of 1 crore 80 lakhs, that is minus 1 crore 40 lakhs, would mean that all my future purchases on which the question of eligibility of credit has not arisen, that means those are legible credits for the time being, because this is a self-assessment tax. We cannot doubt every transaction. So the future conditions or future transactions are legible transactions, and therefore I'll be able to claim that credit. If you block to an extent of minus 1 crore 40 lakhs, it means that all my future credits, which are genuine credits, which are not disputed, will be blocked to an extent of 1 crore 40 lakhs, which is impermissible. It will lead to recovery. That is how the court dealt it. And it was followed. And now even Supreme Court has permitted it. So therefore, negative blocking is not permitted in law. I'll mention only one case, which is semi alloys. Then there are another cases also, but because of the paucity, I'll not be able to name all those cases. Semi alloys is the lead judgment which has to be considered and which deals with the greater detail about the proposition to be laid down. Now I'll go to another important issue. Now there is a issue wherein we all are aware about Bharti Airtel Limited. What has happened in Bharti Airtel Limited was that there was in the month of September, August, September, the initial months of GST, DRC, this GSTR 2A was not there. And prior to this regime, there was a centralized registration concept in service tax. But in GST, now every state a separate registration. So Bharti Airtel, being a telecommunication company, having the presence across the country, was supposed to take registration because they were making outward supply from those states, was supposed to take registration in all the states. So they've taken the registration. Now, after taking the registrations, they were unable to maintain the balance or maintain the accounts qua input tax credit. So what they've done is they paid the extra input tax credit, a huge amount of 900 plus crores. And thereafter, when GSTR 2A was there or when they have reconciled, they came to know that this 900 crores credit was there, but we have paid in cash. So therefore, they filed a petition in Delhi High Court. Delhi High Court has said that yes, by virtue of Circular 26, you should have claim or you should get the refund. So they said this 972 or whatever crores was there, you can claim the refund thereof. Fair enough. The matter went to the Supreme Court. Now, Supreme Court said that, look, this is your mistake. You are under GST, you are supposed to maintain the books of accounts, and therefore you should be aware what credit you have and why you are making from cash ledger. Now, since you could not maintain your books of accounts correctly, and you have ended up paying cash to an extent of this 900 crores plus, we will not be permitting the refund to you. That is what Supreme Court has said. Which means that if there is a error which is committed in maintaining the books of accounts and because of which you have paid something which was otherwise not permissible to be paid from electronic or electronic cash ledger or credit ledger, then the refund is not permissible. You can adjust it in future. This 900 crores in future liability, you can adjust. Nobody's taking no, nobody's saying no, but you cannot ask for the refund. Fair enough. So this was one thing which got settled from the Supreme Court. Now, thereafter, what has happened? Thereafter, another issues were there that, for example, I'll give an example of one of the cases in railroad logistic. What was there in that case? That the petitioner, in spite of he has made supplies to, let's say, the state of the person who is there in the state of Delhi. Same person was also having the registration in the state of Bombay. And from Gujarat, he is making a supply. In spite of entering the input tax credit or the GST details of Delhi, he entered the GST details of Bombay. Because of this was not being reflected in Delhi, and the department came and said that whatever credit you have availed on these invoices are not being reflected, so therefore reverse it. The matter went to the High Court. High Court said, look, this is an issue which is revenue neutral. Because if we allow the amendment of GSTR1, the entire controversy will get over. And therefore, the Bombay High Court has announced, no, you go and get it corrected. So that was Star Engineers, Railroad Logistics. I am repeating, Star Engineers was one of the judgment, Railroad Logistic was another judgment, Edelware was third judgment. One of these judgments went to the Supreme Court. Now, Supreme Court has taken a view, whenever there is a rectification which is needed, I'm repeating, whenever there is a rectification which is needed, and that rectification is revenue neutral, it should be permitted. So Star Engineers or Railroad Logistic or Edelware, all these judgments, there are other judgments of Pentagon, there is Madras High Court, Sundai Chem is another judgment of Madras High Court. All these judgments were in a way upheld by the Supreme Court, saying that if there is no revenue loss, it is a revenue neutral situation, then in that case, the rectification, even if the law does not permit, it should be permitted because there is no loss which is being occurring because of this amendments or rectification. So that is the another judgment which is relevant. Railroad Logistic, Star Engineers, Sundai Chem, Pentagon, all these judgments are relevant. So we can apply these judgments whenever there is an error being committed. We can say that this issue has traveled to the Supreme Court, and Supreme Court has also said that when the situation is revenue neutral, now you should allow it and the rectification should be permitted. Time is less, but there are many things which I wanted to cover, but I'll cover in the 10-15 minutes, and then I think the question and answers will have to be taken up. So another next issue is I'll very quickly touch upon that. I'll not go into the facts and the details. Is Rule 9610. Gujarat High Court, Bombay High Court, Uttarakhand High Court, multiple high courts have taken a view. Rule 96 sub rule 10 was proposing that if you import under advance authorization, that is without payment of duty, and if you export with payment of duty, it is not permissible. So therefore 9610 said, the moment you import under advance authorization without payment of duty, the export has to be under LUT. It cannot be with payment of tax. This issue was, this law was challenged across India before various high courts. Couple of the high courts have dealt with, couple of the high courts are dealing with this. Thereafter, this rule, which was introduced in 2018, it got deleted or omitted from 8th October 2024. And while omitting that law, the council has recorded in their minutes saying that this was causing problems to the exporters. Therefore, we have chosen to omit this rule, do away this rule. Now, the matter which was under challenge before various high courts on the virus that Rule 9610 is exceeding the jurisdiction which is there in Section 16 of the IGST Act. After the omission of this rule, the courts have again heard this matter and said that since there is no saving clause, see, whenever a law gets repealed or omitted or deleted, there is always a saving clause that whatever actions are pending against that particular law or in that particular law can be proceeded with. So there was no saving clause in that notification, in that 8th October 2024 notification. So first, Gujarat High Court has taken a view that since there is no saving clause, Rule 9610 proceedings must go. So whether it is a show cause stage, whether it is a appeal stage, or the order stage, whatever stage it is, it must go because there is no saving clause. It was followed by Bombay High Court also. In the meanwhile, interregnum period, the Uttarakhand High Court has also taken the same view. So therefore, Rule 9610 very clearly says that it has been omitted from 8th October 2024. We are considering, or the courts have considered it as a situation wherein 9610 was never there because there was no saving clause while omitting this provision. So this is one case. The Gujarat High Court judgment, if I have to name, that was Adverb Packaging Private Limited, Messrs. Adverb Packaging Private Limited. So this has been followed in Bombay High Court, Uttarakhand High Court, and various other high courts. In the meanwhile, also Kerala High Court has taken a view that Rule 9610 is ultra vires the law. Now, because now the saving clause was not there and the rule was already omitted, other courts have not dealt with the vires of that. They have not said whether it is intra vires or ultra vires. They have clearly said that all the proceedings which have been undertaken by virtue of Rule 9610 will not sustain, will not be able to have the life further because of the absence of the saving clause. Next issue which I would like to very quickly deal with is Gujarat Chamber of Commerce and Industries. There is a situation wherein Gujarat it is GIDC, Gujarat Industrial Development Corporation. Maharashtra it is MIDC. So in every state, there is a industrial development corporation. They have a land bank, which is being assigned to the leaseholders on lease. So if I am having the lease from the Industrial Development Corporation directly, then there is an entry in 12 of 2017, which says that such lease premium which you are paying or one-time premium that you are paying is not taxable, it is exempt. So at the first instance, when the land is being procured on lease, on a one-time premium payment is exempt by virtue of 12 of 2017. But when I have taken a lease from Industrial Development Corporation, let's say GIDC, Gujarat Industrial Development Corporation, I chose not to construct building on that or start business. And therefore, I transfer that lease to Mr. A. And Mr. A pays back to me that one-time premium. And there is certain transfer fees also which are applicable to be paid to the GIDC by Mr. A. The department initiated actions saying that the one-time premium that you are receiving, the one-time premium that you paid to GIDC was exempt. But now when you are receiving that one-time premium for transfer of this lease to Mr. A, that would not be exempted because it is not exempt in 12 of 2017. It is from supply and therefore the GST liability would arise. This matter, the lead matter was Gujarat Chamber of Commerce and Industries, and there were multiple petitioners who have approached this court in Article 226 of the Constitution of India. They approached and the Honorable Gujarat High Court has taken a view. Look, sir, there is no supply. This is an assignment of lease. There is no independent supply. There is no invocation of Section 7. And since the taxable event is not there, the question of leviability of tax will not arise. That is the judgment which has been pronounced. It is now traveling to Supreme Court. It has been, the SLP has been filed, but the hearing is yet to commence. It is not yet stayed. So that is a good law which is there prevalent in the country. And there is no contradictory judgment of any high court. So one judgment of high court becomes binding if there is no contradictory. All the more in Hindustan Equipment Craft Private Limited. I'm repeating, Hindustan Equipment Craft Private Limited. The judgment of Gujarat Chamber of Commerce and Industries in assignment of leasehold rights has been followed by Nagpur bench of Bombay High Court. And therefore, they have also said that since there is no supply, they have upheld, they have rather followed the proposition of Gujarat High Court, and they have said since there is no supply, there cannot be any GST liability. So this is Hindustan Equipment Craft Private Limited by Nagpur bench of Gujarat, Bombay High Court. So Gujarat High Court and Bombay High Court are two high courts which have followed this. And now let us wait and watch what happens in Supreme Court or what the other courts will decide. So this is when it comes to the leasehold rights. And just I'll take 2-3 minutes and then I'll hand over. Although there are a lot of judgments which I have noted down, but I'll not be able to cover. Another thing which is linked with this is there are certain situations wherein I have made the assignment of my lease to Mr. A, and I have collected GST and paid. I'm repeating. When I took on lease from GIDC, Gujarat Industrial Development Corporation, it was exempt. But when I have decided not to continue in that business and hand over this assign this leasehold rights to Mr. A, and I've charged GST on that because of the interpretation by the departmental authorities and paid that to the government. And Mr. A has claimed input tax credit on that. The department is saying, no, you cannot claim input tax credit because it is covered in 17.5D. It is qua a construction which ought to have happened or which will happen in future. And therefore, the credit cannot be claimed. This issue also, although it is not argued in detail, or maybe the detailed arguments are still to be done, because if Supreme Court will say no, on leasehold the tax has to be paid, assignments, then we'll argue that the credit also has to be given. So then at that point in time it has to be argued in detail. But one of those occasions have approached the Gujarat High Court wherein the credit was disallowed. The Gujarat High Court, in one of the judgments, in Niket Bipin Bhai Patel has taken a view that this input tax credit is not blocked by Section 17.5D. This has nothing to do with construction activity. And you cannot say that since I have taken this land and in future I'll be doing construction, then therefore the credit is to be blocked. No, that is not permissible. Whenever construction will begin, the credits qua those construction activities will be blocked. Not this credit, which is because of the assignment of leasehold rights and the tax imposed thereon and tax paid. So that will not be covered into the construction activity, or it has nothing to do with construction activity. And therefore this Niket Bipin Bhai Patel, SCA number 18068 of 2025 by Gujarat High Court, is an important pronouncement, I would say, and it's a reported judgment wherein the court has said 17.5D will not be applicable and therefore credit cannot be blocked or credit cannot be questioned. With this, friends, I'm sorry, there are a couple of more aspects which I wanted to cover, but we need to respect time and we also are supposed to answer the queries of the participants. So therefore, with that, I'm extremely thankful to the IDTC committee and more specifically the entire team and all the participants for the patience listening, patience hearing. Over to you, Jayesh Bhai, for the queries, if any. We can take up the queries.
Thank you, sir. Thank you so much. We have 7 to 8 queries in the portal.
Yeah,
Are you
please.
visible? Whether queries are visible to you?
I would request that if you can read those queries, that will be helpful.
Okay. The first question is from Viraj Joshi, who is from Mumbai.
Yeah.
His question is, can you provide the names of all judgments?
I think I have already given. While discussing those judgments, I have already given the names.
Yes. The list, I think he must be expecting.
List I can provide, no? If it is required, I can provide to IDTC with the caption, with the citations also.
Yes.
And that can be given. Even if you require the judgments, I can download those judgments and also share that. That's not an issue. I'll do that.
Okay. Thank you
Can
so
be
much.
shared to all the parties.
Okay. Another question from CA Ram Samaria from Mathura. He have asked, block credit on immovable property.
Yes. What is the query?
The question is only that much. Block credit on immovable property.
So block credit on immovable property, if I am not wrong, you are referring section 17.5C or section 17.5D.
Yes.
But when we talk about the leasehold rights, it's do not arise or it is not arising out of an immovable property. Right on immovable property does not mean immovable property, but court has taken a view that it is an immovable property and therefore there is note supply. It will fall into schedule 3 or whatsoever schedules are there. So since there are two situations. One is the leviability of tax. The High Court has said no, there is no tax leviable. And second view is if the tax is levied and collected, then there are two things. One, the recipient can take credit. Two, he can claim refund. So in this situation, in this Niket Bipinbhai Patel, the recipient has availed the credit. And therefore, the reason of denial of credit was 17.5D, which has not been approved by the High Court. High Court said 17.5D is not applicable.
Okay. Thank you, sir. The next question is from Vishal Kukadia from Mumbai. He have asked, can non-payment to supplier within 180 days be adjudicated under Section 74?
See, please understand Section 180 days, Section 74, 74, as per me, cannot be invoked when it comes to non-payment of tax in 180 days. But when there are additional allegations that the purchases on which the payment has not been discharged are tainted purchases or bogus purchases, then I'm afraid that even for reversal of that input tax credit, they can invoke Section 74. So it depends on the facts of the case. There cannot be a straight jacket answer, but yes, in all probability, Section 73 is invocable. But if the department is able to make out a case that there was tainted purchases and therefore the credits which are supposed to be reversed or non-payment is because of those tainted purchases, and therefore then they can invoke Section 74.
Okay. Now the second question from Harsh Vakil from Palampur, Gujarat is, any favorable case law related to non-generation of Part B of e-way bill? E-way bill generated and valid invoices, but not generated Part B of e-way bill. Order under Section 129(3).
There are a lot of judgments of various high courts, wherein the high courts have taken a view that if there is no malafide intention found, then they cannot invoke the entire 200% penalty. That there can be a minimal penalty of 1,000 rupees or 25,000 or whatever is the amount which is prescribed in the statute. There are a number of judgments, but recent judgment is punchy traders. They can rely on punchy traders, wherein punchy traders deals with when Section 129 can be invoked or when 130 can be invoked. So punchy traders and the other judgment for old, like before the amendment of Section 129 was 129 130 was Synergy 40 So these are two judgments which are celebrated and detailed judgments of the Honorable Gujarat High Court, Synergy 40 and punchy traders. You can note down those judgments, Synergy 40 and punchy traders, and you can have a look into that. I am sure that you will get an answer.
Okay. One more question from him again. For appeal pre-deposit, can matter related to RCM to be paid via credit ledger or pre-deposit to be paid in cash as the appeal is related to RCM?
No, certainly not. It has to be paid in cash.
Okay.
See, only output liability which is arising out of output taxes or outward supplies can be paid out of electronic credit ledger because Section 49 permits that. But when it comes to RCM, then RCM is always payable in cash. So pre-deposit also will have to be paid in cash.
Okay. Thank you, sir. Another question is from Uma Shankar Jha from Delhi. Query regarding transfer of ITC in case of demerger. Suppose a business has two segments and one segment is demerged in a particular state, say Uttar Pradesh. There are no assets attributable to be demerged undertaking. However, ITC pertaining to that demerged segment is available in the electronic credit ledger. The question is whether such a ITC can be transferred to the resulting entity despite there being no assets in that state.
As per me, yes, because there is no such condition in law.
Yes.
And 18.3 does not prescribe any such condition that there has to be an underlying asset, there has to be an underlying stock. It is not that. Whatever you have consumed, see, there may be a situation of 54.3, inverted duty structure, that your output liability is of a lesser rate and inward is at a higher rate. So because of that, there is no stock. Because of that, there is no asset, but the credit is there. Then certainly this credit, because it is an asset, this credit also is an asset. It's equivalent to cash. So therefore, it can be transferred as per 18.3. That is my view.
Okay. One more question from Mr. Jha. He has query regarding filing an appeal before GST Appellate Tribunal. In his case, the refund claim has been rejected by appellate authority. Now he intends to file an appeal before appellate tribunal. The query is whether pre-deposit is mandatory for such a filing, such appeal, particularly in cases involving refund rejection.
No, never. Refund is what you are asking. There is no. See, there are two situations. One is the refund you have claimed, which the department is asking to repay back to them. Then, in that case, there is an order which is asking for a money to be paid by you, which you have claimed as a refund. For that, pre-deposit is necessary. But if you are claiming a refund which has been rejected, then you are filing an appeal. There is no pre-deposit which is required.
Okay. One question from Mr. Samir Kapadia, Mumbai. He asking, please address the issue of order in original containing tax, interest, and penalty, wherein the tax, but the question is not complete. So I think we should skip that question.
I think it is related to that 122 discussion that I have made, no?
Okay.
So if there, even if the OIO is containing the tax, interest, and penalty, then it will sustain that Patanjali Ayurved Limited will not be applicable, and therefore you will have to go on merits, and you will have to pay 10% of the tax in dispute. You are not, say, if the tax is, let's say, 50 lakhs, and penalty under section 122 is 5 crores. You are not supposed to pay pre-deposit of on 5 crores. You are supposed to pay pre-deposit only on 50 lakhs, which is the tax dispute. That is 107 subsection 6.
Okay.
If we have understood the question correctly, because the question is
if the question is correct. Okay. Another question is from Vikas Saini Kothuputti. Sir, please advise on inverted duty structure refund rule 89(2)H. Which says that whether all output invoice should be mentioned or only inverted invoice.
see, this becomes a procedural question, and I am a person of litigation. But
Okay.
I personally believe that only the invoices on which you are claiming the input tax, the refund of accumulated input tax credit because of inverted structure needs to be there. Not all the invoices. That is not, because even the formula does not permit it. The formula also says that net ITC multiplied by so and so, and the tax paid on inverted duty. So only invoices which are pertaining to inverted duty needs to be taken care of, because that will be net ITC for you.
One question from Mr. Abhilash from Bengaluru. Is Gujarat Industrial Development Corporation a government authority to claim the exemption under section serial number 40 of notification number 12/2017? There are cases where these development corporations are charged GST on upfront lease premium.
See, one thing is very clear. If you are charging GST, even when you are exempt, you will have to discharge it. That becomes a charge which is, I'll say, without jurisdiction, you are charging it and you are depositing. But if you are not depositing and retaining, then it becomes an offense. Otherwise, not. So there may be a situation GIDC is not charging, but maybe some of the industrial development corporations are charging. Whosoever is charging can certainly collect and pay, and then the person who is paying can claim that credit. Or else, if they are in from Gujarat and they have been charged, they can go and claim the refund because of this judgment of GIDC, this Gujarat Chamber of Commerce and Industries.
Another question is from CA Harshit from Jalgaon. He is asking, he is having a client whose entire supply, he is a transporter. His entire supply is that की in RCM में सामने वाला पैसे GST भरने वाला है. So whether his
Right.
client is required GST registration?
Obviously, if we have to discharge the liability, see, again, this is a procedural question. But looking to the scenario, the scenario is like this: that I am a transporter, I am covered under RCM, and I am making a supply to, let's say, Jayesh Bhai.
Yes.
Jayesh Bhai, if he is not registered, how he will make the, or how he will discharge the liability, which is casted on him. So therefore, if I'm not wrong, there is a provision in section 24 which says compulsory registration. If I'm liable for RCM payments, I'll have to take registration and make the payments.
No, sir. He is a transporter, and all his customers are registered dealers, and he is supplying transport services to all registered dealers. So whether he is required to get registered under GST?
No. Why he is registered? No, as per me, no.
No, no. Sir, which section or rule?
Only 9(3) covers it, no? Section
Okay.
9(3).
Okay. So not required for registration.
No. Why he will be required?
Okay, thank you. Another question is from Miss Deepa Mulchandani from Ahmedabad. Sir, in case of Niketan Bipin Patel, the court has taken a view that since services were not used for construction because no construction was undertaken.
Correct. Correct.
Correct. Yes.
So that is the logic that 17.5D cannot be invoked because there was no construction.
Barabar.
It's I would say lease is nothing but rent. So
Yes.
you are claiming a credit of rent against the rent payments. It's not against the construction. So that credit is allowable to you.
Okay. So one question is from Piyush Bhai Ahmedabad. Royalty RCM show cause notice status. Notice under section 74 are being issued for RCM royalty for the period for which 73 time is lapsed.
See, please understand, when it comes to royalty issue, it is pending before Gujarat High Court. A bulk is there, a batch is there. It is pending in Supreme Court in Udaipur. So Udaipur Chamber of Commerce is the petition which is pending. Now, please understand, royalty if you are not disclosing and RCM if you are not paying, then Section 74 is certainly invocable. They are invoking Section 73 also, but 74 is also invocable, and therefore they are rightly invoking that. And almost all the matters are pending before the Gujarat High Court, that whether royalty can be or whether GST can be levied on royalty payments. So we'll have to, this is a sub judice issue, so therefore we'll have to wait and watch. But 74 notice can certainly be issued.
So the last question, it is with me. I have one client who has got expired after 2021. But after that, for the period 2020-21, the department has issued notice for being a NGTP beneficiary. Now all the notices started to be issued in the name of his wife because dealer has died and all notices got on his wife's name. Till date, order has not been issued. But whether it is valid, can department issue notices for a died person?
See, department cannot issue a notice in the name of died person.
Yes, they are issuing in the name of died person.
Let me answer this.
Yes.
Department cannot issue notice to a dead person, but they can certainly issue a notice to the legal hire of the dead person. Now, when it comes to the liability is certainly there, but liability is restricted to the death which is intestate. If he is leaving around some money or some assets, then the liability is restricted to that. If there is no liability, there is no assets which are left behind to the legal heir, then he is not liable from his personal capacity. That is what is the law which is laid down till date.
But the notices are all issued in the name of died person, deceased person.
If it is issued in the name of deceased person, you can approach the High Court and get the notices quashed.
Okay.
Because that is not permissible.
Okay. Sir, some question has arrived in last 2-3 minutes from Mudit Agrawal, Kishanganj. If a company is registered in West Bengal and has one building in Bihar, which has been rented to a registered party, whether the company is required to take registration in West Bengal only or have to take registration in Bihar also. All the invoices and management is done from West Bengal.
Sir, again, this is a procedural question. And
Okay.
I'm a person who runs away from the procedures because I'm not into the procedural practice. But
Okay.
I'll certainly try to answer this. If I have a property in West Bengal, I'm located at West Bengal. All my books of accounts, everything is maintained at West Bengal. And I also have a property at Bihar, which is let out. Then certainly I have both the options. I will go with this answer that I have both the options. Being registered in West Bengal, I can raise an invoice to a person who is in Bihar, B2B invoice, claiming or charging IGST, because location of the property will become relevant here as per the place of supply rules, and therefore IGST will be levied. If I am registered in Bihar, then in that case I can raise an invoice of CGST and SGST also. But only because the person registered is in Bihar and I am registered in West Bengal, I am not supposed to go to the state of Bihar and take registration there. Would be my precise answer. Maybe the procedural answer I am unable to give. Yes.
One question from Mr. Dipesh. Is gone. Dipesh का आ गया question. ठीक है, हटा दिया उन्होंने. One question from Mr. Suresh Vijayawada.
Yes, go ahead.
Compensation record from other party due to non-performance of contract is GST chargeable. In some cases, GST charged, while some cases GST is not charged.
What is this question?
Compensation record from other party. No, sir, it's not complete question. I'm thinking.
If it is a liquidated damage,
Mhm.
what I can understand from this is if it is a liquidated damage, then we do have a circular.
Mhm.
We can say that it is being charged by someone and it is not being charged by someone does not make any sense. Liquidated damages, as per me, is not chargeable. So
Okay.
therefore, again, this may be an aggressive view, but this is a view which I have taken. The liquidated damages are not taxable, but certainly compensation, any type of compensation that you receive has to be looked into from the facts forum. If facts suggest that there is a supply because of which you are, for example, an actionable claim, for example, a compensation for not doing an act, then it is a supply in Schedule 2 and you will have to discharge the tax liability. So it all depends on the facts of the case. How the facts have to be interpreted, and accordingly, we'll have to see whether there is a supply or not, and we'll have to discharge the liability.
One more question from Mr. Rajesh Khurana. If a person is liable to make interest supply under reverse charge basis like advocate, he is not required to get himself registered. I think it has been answered by you. 9.3. Not
See,
required to do.
this question, I think he is asking from the perspective of
Advocates.
advocates or from the perspective of the person who is liable to be registered in case of RCM. But I am a strong believer that in every situation, the same law is not applicable. For example, advocates are outrightly out of the tax net, and therefore the advocates are never registered or liable to be registered.
Question from Alok Mishra. CA, a exporter can export under LUT and IGST parallelly, can take refund under LUT as well.
Yes, he can do that. There is no bar.
Okay. Then
As per
Mr.
me.
Mr. Ram Samaria from Mathura. Impact of Safari retreat on block credit in current scenario means whether credit on immovable property after amendment in 2025 could correct interpretation be explained.
No, I don't think so because see, Safari retreat has been dealt with the machinery provisions, the interpretation of the word or the word and plant and machinery, which has been now amended by the statute. So therefore, the statute will prevail, not the Safari retreat judgment for the prospective periods. This is what I understand.
Barabar. Okay, all the questions have been done, sir. So whether we go to further move to closure proceedings?
Yeah, I
If you
think
permit.
so.
Yes, sir. Yes, sir. Thank you, sir. Thank you, sir. Thank you, Avinash, sir, for sharing such wonderful knowledge with us during this webinar. The session was very insightful, and I'm sure it will greatly help all participants in their professional journey. We truly appreciate your time, effort, and valuable guidance. Thank you, sir. Thank you very much. And thank you, Jay, sir, for moderating the section. Thank you, sir.
Thank you very much.
Thank you.
Shall I leave?
Sir, after addressing all the questions of our esteemed members, it is my privilege to propose the vote of thanks for this insightful and enriching session on understanding recent judicial pronouncements under GST. At the outset, I extend my sincere gratitude to our esteemed speaker, Dr. Avinash Poddar sir, for sharing their deep knowledge, practical perspectives, and clear analysis of the latest judicial developments. Sir, your ability to simplify complex rulings and highlight their real world implications has been immensely valuable for all of us. I would like to thank the organizers for putting together such a timely and relevant session. In a constantly evolving GST landscape, staying updated with judicial interpretation is not just beneficial but essential. And today's discussion has certainly helped us move a step ahead in that direction. My appreciation also goes to all the participants for their active engagement, thoughtful questions, which made the session more interactive and meaningful. Lastly, I thank the support team for ensuring the smooth conduct of this meeting. We hope to continue such a knowledge sharing initiatives in the future. Thank you all once again for time and participation. Have a great day ahead.
Thank you so much. Thank you.
Thank you, sir.
Yes, yes.